What's going on, my traders? It's JD Trades. I'm back again with another video. Now, as the title of today's video says, I'm going to show you guys my most profitable, lucrative gold strategy. Guys, as always, don't forget to click the link in my description box to, of course, join my Telegram. I post a lot of trade setups. I post a lot of trade analysis and other content. Don't forget to leave a like on this video, comment, and subscribe. Turn on that post notification to get notified whenever I post some more fire. So let's get straight into today's video. All right, cool. So in terms of this gold trade, or this gold trading strategy, should I say, there are a few things that you're going to need. Number one is a free-flowing market. I will show you some examples of free-flowing markets. Number two is you need an active trading session. So whether we are looking at gold, are we during New York session? You're going to need a pullback on the lower time frames, and you're going to focus on the 5-minute, 15-minute, and the half-hour time frame. The strategy is very simple. Anyone can understand it as long as you have these parameters in place. Let's get into some examples. So, number one, I do have some screenshots here to show you guys. So right now we are in free flowing market. So this was last week's price action, Thursday, 18th of July, where we saw gold give us that massive move to the downside, okay? Like so. This here, guys, is an example of a free flowing market. So what does that say? Well, what does that mean for us? We have step number one, we need a free flowing market. Step number two, do we have an active trading session? During this time period, we are deep inside of the New York session. So we are active inside of a trading session. Step three, let's find a pullback on the lower time frame. Step four, focusing on the 5-minute, 15-minute, and the half-hour time frames. If we turn our attention over to this example, which is working inside of that 18th of July's price action, we can see here we had price push to the upside. We had the initial reaction on the 15-minute time frame here, working inside this 15-minute imbalance. I gave this setup out inside of my Telegram. The link to my Telegram is in the description box of pretty much all my videos. Just click there and join. It's completely free. I will post all of these chart analysis before price even makes a move. So we can see here we had that initial breakdown of the low. We've had price test the imbalance. We had a half-hour imbalance sitting inside of here as well. We've seen the market test it once. And on the second occasion, we swept the high made at New York Open before we started moving freely to the downside. Now, once you master this strategy, you'll be able to enter positions comfortably. It's about understanding that you don't have to always be the first to partake in price movement. You can wait for an optimal entry. Well, it's not always going to be optimal, but you can wait for the opportunity to come before you partake in the market. So take a look at this area. We're working on the 5-minute time frame for the time being, okay? We can see here price started to move off from that 15-minute area after taking out New York sessions high over here. So once we started moving, what did we do? We broke the most recent low here. From doing that, your initial reaction should be, let me find 5-minute up candles that I can wait for price to retrace into to go short. It's as simple as that, guys. I promise you. Find 5-minute candles, okay? 5-minute, 15-minute, half-hour candles during a free-flowing market in an active trading session, you will find the most easiest entries ever. As we can see here, we have this 5-minute candle here. We had a pullback to test the candle, and this is your secondary entry. Just like that, very simple. That is your secondary entry. You're going to, of course, enter where the low or the foot of that candle is. Put your stops above the candle's high. For me personally, because this is gold, I usually go with a 40 pip stop. I would always recommend you guys go with a 40 pip stop. There's no real reason for you guys to not give gold a chance to breathe. Gold is a pair that moves a lot, so you need to give it the respect it deserves. Next, we saw price push down, create this up candle, push down, and what did we do? We broke the low again. What are we doing? We're waiting for a pullback back to that up candle. So we had that test in the up candle here. So that was your first chance to enter the trade, okay? Or for another re-entry. If you missed the initial move up top, you've had one, two, and we retested the area again. We're going to apply the exact same. Oh, sorry about that, guys. My computer switched to dark mode. Okay, we're going to apply the exact same strategy. We're going to wait for a pullback. We're going to put our stops just above the candle's high. Now, preferably give it 40 pips, even if you can go for a tighter stop. Yes, on this occasion, you could have gone for a tighter stops, but in other occasions, spreads and whatnot might have tapped you out. So it's better for you to go with a larger stop on a pair like gold, which is going to easily give you 120 pips. If it doesn't give you 120 pips, it's going to give you 80 pips where you can go for 1 to 2 R&R. Let's take a look at some more examples. So as price was melting down on Thursday, 18th of July, we had Friday, the 19th of July, continue the bearish momentum to the downside. Now, again, we can see here, we don't have any substantial candles, right? These candles and this type of strategy looks a very specific type of way. Look at how this candle formed. We pushed down, we broke the most recent low. We had a test back up into the low, doing exactly the same thing, giving it 40 pips, targeting 1 to 3 R&R, or you can target a 1 to 4, 1 to 5, 1 to 2. The choice is absolutely yours. Then we dropped again. So those are 3 trades so far from Thursday to Friday, where it's hit all three TPs, okay? 3%, 6%, 9%. Okay. Now, look at this picture here again. We have another 5-minute candle forming. We drop down, we test the 5-minute candle, there's another short. Push down, we pull back up, we test the exact same area again to close off the trading week. Okay, so this would be late Friday. And we hit another 1 to 3 R&R. I'm telling you guys, this is one of the most simplest, easiest, high probable entry setups that I have, and I'm giving it absolutely away to you guys to test out. Test the strategy out and tell me what you guys think. Now, I've showed you a lot of shorts, okay? The shorts I showed you was from Thursday all the way through to Friday, okay? As you guys can see here. Now, let's look at the upside. Examples of upside. As you can see, gold has been very bullish for a very long time during this time period. It's only recently that we've seen some sells come from gold. Let's take a look at the examples. So we can see here on gold, we had, remember, these candles look so identical. Whether I flip this upside down or not, you're going to realize how similar it looks to these 2 examples here. This example and this example is the exact same thing. We found, remember, what are our steps? Free flowing market. We need to be inside of an active trading session. We need to wait for a pullback on the lower time frame. And we need to focus on the 5-minute, 15-minute, and half-hour time frames only. Yes, this can work on the 1 hour, the 4 hour, and even the daily. However, because this is more of an intraday trading strategy, this is exactly the time frames I want you to focus on. Here, we have scenario for the half-hour time frame. We had this half-hour down candle. We had a push-up. What did this push-up do? Not only did it take out this, okay, structure, it also took out the structure to the left of it, okay, which gave us a new high. What did we do? We pulled back down, we tested that half-hour candle, we pushed up again. Similar picture here, we have this half-hour candle, we pushed up, we had a slight test over here. Okay, this picture makes it a little bit easier to see. You can see we had a slight test back down into the candle, and then we had a continuation to take out the high. From this 15-minute candle, we took out the most recent high to the left. And what did price do? I believe we had power speaking around this time. I believe it was around 1:30-ish, or we had some sort of high impact news. However, we can see here that we dropped down, we tested that 15-minute candle, we went in for another buy. This is so, so simple, guys, and I want you to give this a go. Go to your chart and backtest this. This doesn't, it works across the board. It works for currencies, it works for cryptos, it works for the stocks. It also works for the commodities, okay? So I want you guys to give this a go for yourself. Now, if you guys enjoyed this video, make sure to join my Telegram. Link is in the description box of this video. Like I said, thank you guys for watching. Leave a like on the video. And as always, remember the theory behind the practice. Peace.